today we are doing something a little different by diving into the investment platform Public's recent partnership with Zerohash to essentially power its next generation of crypto tools. This move comes at a moment when demand for more sophisticated crypto access is picking up again in the public markets. With that said, I'm excited to have Edward Woodford, the founder and CEO of Zerohash here, and Stephen Sikes, the COO of Public. Hey guys.
Thanks for having us.
Great to be here.
Thanks for being here. Yeah, so Stephen will be a part of the first part of the show to kind of talk about why Public chose Zerohash, what new tools are coming for users, customers, etc. And then we'll spend some time with Edward diving into the infrastructure story, its massive funding round that valued the company at $1 billion, and the next phase of kind of crypto in America. With that said, guys, we always like to start by asking our guests, can you tell us what does crypto in America mean to you?
What does crypto in America mean to me? I think crypto for us, again, Public being an investment platform focusing on, helping people grow their wealth and people that are serious about investing. We've always said out loud that, the U.S. capital markets are the greatest wealth creation mechanism known to man. And I think that's now challenged by the crypto ecosystem. And I think, we went through a long period, over the last, call it just more than 4 years, where crypto had a really tough time continuing to gain share and continuing to be that wealth creation mechanism. But the last, 11 months and change have really changed that. And I think seeing, a rival ecosystem to the U.S. capital markets and the way that crypto is and a way to create wealth for a broader swath of Americans is really cool. And I think that's what we're all here. And those are the products we try to build.
I suppose me, apart from my accent and obviously being clearly British and being excessively polite and both Steve and I not understanding who should go first, I've been building in the US since 2017 in crypto and in stablecoins. And so I think crypto in America means the ability to innovate, the ability to build a great business, the access to capital, right? Like I chose to build this business here. And it is because of the ability to gain access to that like nowhere else in the world. And, I've never been more excited about the potential to kind of shape the next few years in terms of what this technology can do. So that for me is like, it's been my life for the last 8 years. That's what crypto in America means. It's very personal to me.
Edward, I have to ask two things. Number one, where in the UK are you from?
I grew up just outside of London, a place called Essex. So it's seen as the Jersey of the UK, which can mean a good thing, bad thing. I know we've got some people from Jersey here.
It's wonderful. It's wonderful.
It's wonderful, but it can sometimes have some misperceptions.
Yeah, I think me, Eleanor, and Edward, we all have dual citizenship, right?
Yeah, so I grew up in Aspley Guys, Edward. I don't know if that rings a bell, but it's in Bedfordshire. It's a tiny town. But yeah, my next question to you is, building in America is slightly different than building in the UK, but why America as opposed to a place like Essex or indeed London?
I suppose. So I came here for grad school and I just stayed. But I do truly believe that I couldn't have achieved what we've achieved here in the UK. And that makes me a little sad, to be honest, right? Because I'm a proud Brit. But just the access to capital. And then, frankly, there has been some challenges on the regulatory side. But the UK is still behind in terms of the perception, some of the news that is coming out. I mean, Andrew Bailey, the head of the central bank in the UK, came out with a slightly warm statement, and everyone's latching onto this as if this is game changing. So, it's the market size, it's the market opportunity, it's the access to capital, it's the innovation, it's the mindset, and that's why we're very proud to be here. And now I'm married to an American. I have an American daughter, so there we go.
That's how it happens. Yep.
Yes.
There you go. I just got my citizenship, so I'm half Brit, half American now.
Congratulations.
Thank you. Well, for listeners who might not know the full story between your guys' partnership, Stephen, what led Public to expand its crypto offerings right now? Why this moment in time?
Yeah, so I mean, I think, kind of post-election last year, I think as we saw the crypto winds changing, we saw a ton of demand from our investors looking for better, more broad crypto exposure in terms of token selection and order types and more powerful features. And I think we went looking, and I think there were sort of two one tangible, one intangible things that we went looking for. The first is the very tangible. Hey, how do we, have a step change improvement in the platform that we're working on and what we're able to offer our customers? And Zerohash offered that in terms of the coin selection, the hours of availability, crypto transfers on chain, and the breadth of services that they offer there, all the way through the order types, like I said, account types and things like that. Again, just a really mature platform offered by people that are genuinely committed to being in this sort of crypto as a service business for the long run, as sort of Ed has demonstrated for the last, 6, 7, 8 years, right? With no waffling, right? We've seen many people come and go from this particular industry, and Zerohash has been, sort of a stalwart through it all, which I think meant a lot. So that's the tangible part. The intangible part is, as we are in a new world for crypto, starting in November of 2024, that meant we had to be ready for whatever might come, right? All of the regulatory change creates a ton of opportunity, but it also requires that we work with people who are going to be able to move quickly to take advantage of any of those changes that might come. And again, looking at the landscape and finding people that are both, again, very sound in terms of their commitment to the business and their sort of regulatory footing, and able to move quickly and keep up with the regulatory apparatus and what changes might come. I think Zerohash was sort of a one of one as we went looking.
And then Edward, from your side, there's obviously a lot of platforms out there. You probably had a lot of options. What stood out to you about Public and this partnership in particular?
Yeah, I mean, I think Public's obviously been an innovator for many, many years. And for us, our goal is to work with everybody and to provide access to every single American here, right? So 55 million Americans own crypto, but what about the untapped potential? I also think that Steve kind of articulated something that I think is really interesting. 55 million Americans own crypto, but if you think about the untapped potential of people that already own crypto today, so for example, different account types. So if you think about retirement account types, joint account types, where people hold large amounts of money. If you think about high net worth individuals, and Public's done a great job of attracting, people that really invest, pro traders. If you look at any of the advertising, it's all around options and sophisticated traders. High net worth people are very under allocated into this asset class in particular. And then if you think about some of the changes that have happened in retirement, especially with the clarity from Trump, there's a lot of untapped potential there. So for me, it's not just bringing more people into the space. What's really interesting, I think, about this partnership is the ability to accelerate and increase the wallet share of crypto, because it's really embedded into the existing ecosystem where people already hold their account, do everything else that they already do today. And it's about increasing that wallet share for retirement, high net worth, and other different account types.
Yeah, Megan, just to build a little, like I said at the beginning, and when you asked what does crypto in America mean, I mean, I think it's about creating more and better models for people to take advantage of the investment opportunities that crypto represents. And again, that comes down to a bunch of small things, even again, like Ed was alluding to. Hey, different account types, retirement, entity account types, trust account types, like the things that the traditional financial services world use to help people have a beneficial approach to investing, right, haven't made their way to crypto. I mean, sort of, hey, listen, there are plenty of sort of alternative tax avoidance strategies in crypto, and I'm not sure that any of those sort of will stand up to long-term scrutiny, but I think there are plenty of them that are legal forms that just haven't been developed within sort of the existing ecosystem. And I think we're excited to partner with folks like Zerohash to build that sort of world.
So Stephen and Edward, you guys both have deep sort of traditional finance, fintech backgrounds, a lot of experience there, but we're talking about this huge wave of institutional adoption coming into crypto. Do you think a lot of that demand is being driven by sort of investors and institutions wanting to offer these products? Or do you see like something like a trust account or a retirement account? Do you actually see the interest coming from customers? Like where do you think that momentum is coming from right now?
I think it is absolutely coming from the customers, right? I think if I went and I looked at our most requested features, I think like crypto IRA would be very high up that list. And not to say that's something we have immediately, but it's, something that we're excited to work on with folks like with Zerohash specifically. And I think, again, this crypto cycle has been, like you described, right? It's been very much about institutional adoption, wealth management adoption, largely in the form of ETFs, because for the first time we have products that can exist in that world, but that's limited to a very limited set of the sort of crypto world and crypto assets that are available through those forms. And so I think we're, again, continuing to work with Zerohash to find ways to expand that as well and create another sort of tailwind for the crypto industry.
Yeah, Stephen, I was wondering on that front, because when I think about Public, and you could correct me if I'm wrong, but I think about it as like a general retail audience, right? Like the person that wants to be able to invest in stocks and in an easy, accessible way, right? Is that correct?
Yeah, I mean, I
Okay.
think we like to say we exist for people who take investing seriously, right? And I think we
Well,
view
yes. I mean,
people who are
yeah.
smart and sophisticated,
Yeah,
right?
yeah.
They may not be professional traders, but again, we have plenty of those, right? We have, again, people that want to do well in the markets and don't view it as sort of a casual gamble. We view it as people that want to grow their wealth and want to do it really well. But again, I think that's, that's in the
Well,
same
I
thing.
guess like my follow up to that, the reason I wanted to like confirm with you on that is like from the institutional side, you guys have talked about it a little bit, right? That's a different audience than like educated or sophisticated retail investor, right? So how do you kind of think about appealing to the institutional audience? Is that of interest to you guys too, as like the demand starts to like grow on Wall Street for this?
Yeah, I mean, I think we exist to serve retail investors first and foremost. We don't currently directly serve any institutions or advisors or anything like that. But I think the thing that we see and has been a large trend in the industry for the last, I don't know, call it 10 years, is that convergence of retail trading volumes, retail interest, retail sophistication with what was previously considered sort of exclusively available to institutional. And that's all downstream of this sort of amazing wave of better data, market information, content, news that's become available to sort of retail investors overall. That, again, if you zoomed out 10 or 15 years ago, you would have had to pay subscriptions to find real-time, market data across the equities world. Now, I think basically all of that is now completely available to every retail investor. And the tools that, institutional investors have and that they're able to use as professionals, far more limited incremental stuff versus what the retail investors have than if you looked sort of 20 or 30 years ago.
Yeah, I'm curious on that front. Before we hit record, we were talking a little bit about some of the more exotic products that are out there, offered to retail. I think we've talked before on the show about not everyone needs to be trading derivatives, right? It's not for everyone. How do you guys approach the level of sophistication of the retail investor and the tools you guys are able to put out there for them versus like some of these more exotic kind of products that the industry is really interested in putting together?
Yeah, I think we saw a little bit at the end of last week, some misunderstandings of how sort of perpetual futures markets work, even from people that had significant sums of money in those markets. And I think for that reason, like, it's been something we've avoided, right? We don't like those sort of synthetic markets. We focused instead on spot crypto availability of something that you can hold, use, transfer, and really have custodied. And I think that's the really important thing, I think, is, again, controlling that rather than just playing a price speculation game. And again, I think it goes back to what we stand for, right? We want to build a platform that's for people that are serious about investing. And sure, there's a world for rank speculation. There's a world for gambling. And again, maybe perpetual futures is great for that. And there are some corners of crypto that make that, that make that particularly easier, exciting. But that's not the business that we've built. And again, I think that's one of the reasons we've chosen Zerohash.
Yeah, Ed, I want to ask you the same thing. I mean, you guys just signed a big partnership with Morgan Stanley, one of the most famous names on Wall Street, right? One of the most conservative, I would say, investment banks out there. I mean, how do you think they looked at Friday and they thought, oh, crypto, big no-no? I mean, were those conversations that you were having with them? I mean, probably a lot went into this partnership. I mean, obviously you guys don't dabble in the whole derivatives, perpetual side of things. But I mean, do you think institutions like Morgan Stanley and, the Goldmans and the Citigroups, they're looking at this and thinking, there's still this sort of infancy side of crypto where these massive liquidations are still going on. The volatility is certainly still there. Is there still hesitancy there? Or do you think they understand that it really just is this side of the space that kind of exists and probably will exist for a long time, and they accept that now?
Yeah, so I think, talking generically around different GSIBs banks that we service versus just precisely Morgan Stanley. But I think that there's a understanding and appreciation that not every asset in this space is born equal. And so their philosophy, at least initially, and Morgan Stanley's been public about this, for example, that they will launch with just Bitcoin, ETH, and Solana. So they view those, I think, really think of this space as a spectrum and not really baking this all into one lens is really the key. So they view this as, hey, we'll provide some guardrails around the types of assets that we'll offer our customers. Secondly, though, I think if you should really unpack what happened on Friday, obviously, a lot of it was driven by Binance, and without getting into a debate about was this a true DPEG or was it not, I think the consensus now is that it's not a true DPEG. There was one exchange that really had activity that didn't reflect reality, and Binance has obviously reimbursed those people, and I think that actually explains to people the opportunity as well. is that is an impediment for people even to enter the space, the maturity of some of these platforms. And so that creates opportunity. So I think it does create both a duality of, okay, let's be careful about how we enter the space. Let's be very considered around the spectrum, but concurrently also reinforces that there is a massive opportunity. There's clearly a trust question around many platforms in this space. And so when you combine really well-trusted organizations with the innovation of crypto, I think that unlocks a lot of new people to enter the space and goes back to my point about actually increasing wallet share of crypto in terms of people's portfolio. Actually, on Friday, it was kind of leaked and it was covered by CNBC that Morgan Stanley will now allow its advisors to advise on crypto in every portfolio. And that is really, really meaningful. Again, it will be a subset of assets for a subset of clients. But I think that is actually more meaningful. So that would be my answer to that point. It's a spectrum, and I think it also uncovers a lot of opportunity.
Bitcoin might sound complicated, but the Gemini credit card makes it simple. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. No annual fee, and right now you can grab a $200 Bitcoin intro bonus. It's the easiest way to start building your Bitcoin stash. Go to gemini.com/CIA to learn more. Terms apply.
Yeah, me and Eleanor are nodding because we talked about that on the Friday live stream show about Morgan Stanley kind of expanding that optionality, right? And I think it's huge in a way that it taps into a market that either, didn't think about this before or didn't have the ability to at all. And so I think also it kind of like ties back to like the initial part of this conversation where it's like, Public wants to give customers more tools and choice is kind of like how I interpreted the partnership between you two. And I think you touched on this a tiny bit in the beginning too, Stephen, but I'd love to get kind of the feedback or demand you're hearing from these American investors that really drove to this decision. Like, what are you hearing from people? Do they want to just literally be able to buy Bitcoin? I feel like it's got to be more than that, right? Because they have the ability to buy Bitcoin right now. So
yeah, it's been. I mean, again, it's sort of a lot of, I think, maybe what you would expect, right? Which is new coins. They make a big entrance into the market. Maybe again, Trump coin as an example.
The meme coins, yes.
Hyperliquid too, right? We've seen these sort of big coin listings. Pump being another one where we've again seen these moments in the crypto market where there's a new asset available that really grabs the imagination of investors. And I think that's been a ton of demand that we've seen. Again, I think there's persistent demand to be able to have really high quality crypto transfer abilities, right? In lieu of a full self-custody wallet, I think most people actually just want to have their crypto held somewhere that they feel comfortable and is responsible, but then be able to use it when they need to and easily, and have reasonable guardrails to protect them against fraud and scams that we see across the industry far too often. But at the same time, be able to again get things done when they need to. So I think we've heard feedback on all of those, in addition to the stuff I talked about earlier, which is forward-looking opportunities around account types and opportunities like that.
Yeah, but I think that's important to draw the nuance between obviously Steve's clients, right, which are much more active, semi-pro, and then obviously people that view this, there's obviously wealth clients that are a lot more passive. And that's what's really massive about the advisory business, is that it allows a degree of passive customers to say, look, my risk tolerance is this. And the advisor says, okay, this is your portfolio, and 1, 2, 3, 4, 5% of it goes into crypto. That is a very different view, either in terms of people have their active trading portfolio and then their wealth portfolio, and one can do crypto and one doesn't, historically has been the axis, or people just haven't thought about it in terms of an active strategy. So I think that it's the different client bases or even different lenses within one client place's allocation of wealth.
Yeah, I mean, listen, and we have plenty of both, right? We have people on both ends of the spectrum, from the most passive investors to the most active investors, and I think they all share in common that they're they take it seriously. But I think even for the passive folks, again, the spot access, again, occasionally access to the ETFs, though we do increasingly see people still choose access to the sort of the Bitcoin spot versus the ETFs, or same with ETH or any of the other large assets. But I think we have seen an increase in trust in the industry just by virtue of the ETFs existing and the tailwind that's created in terms of adoption from the sort of wealth complex, right? I think that's been largely the story of this Bitcoin or this crypto cycle has been that adoption by the large asset and wealth managers driving price appreciation versus, if you look back at 2021, what was that story? Like that was an NFT ETH story in many ways, I think, for the things that captured a lot of imagination. And then you go back to 2017 and that was an ICO story, right? Like this is an interesting one because it's actually not really as much about a crypto native innovation so much as it was a TradFi innovation, ETFs, that really made crypto and sort of the investability of crypto much easier for a broad swath of the wealth market.
Stephen, before we let you go, curious, can you just give our listeners just a quick sum up of really what this partnership, maybe in a sentence or two, what this partnership will bring the users of both your platforms?
Yeah, sure. So in a couple of weeks, we're going to transition sort of all crypto on Public to Zerohash. That will lead to an expanded selection of crypto tokens available. I think there'll be an extra 5 or 10 crypto tokens by the time all is said and done. We'll be able to enable, more on-chain crypto transfers for all members. We're going to have, sort of better limit order types available, good till cancel, and so on. And then we'll continue to work on sort of more account types. Not something that's going to launch immediately post transition, but in the near future, it's something we're looking forward to.
Awesome. Well, thank you so much for joining, Stephen. We're going to keep Ed around for a little bit, but we appreciate you coming on today. I appreciate it.
Sorry to abandon you. Anyway, thank you for the time.
Thanks so much.
Have fun. Good luck.
Bye.
All right. And then there were 4.
Yeah. It's sad. No, I'm kidding. Okay, Edward, moving on to look forward and honing in on your company, Zerohash. It's at the center of a lot of what's happening in infrastructure right now. But before we talk about that, you talked about the early days. I believe you said it was like 2017, right? That's a long time ago in crypto years. Can you kind of take us back to the beginning of the company? What was really the problem you were trying to solve when you started it?
Yeah, so I actually bought my first Bitcoin at the MIT bookstore in 2015, but didn't enter. Yeah, so this was when it was hard to buy Bitcoin around, and it's kind of the evolution. So that's where I bought my first Bitcoin, and it was actually through the LedgerX platform that then got bought by NCR. So really, that was my first foray. My professor was Christian Catalini, and obviously if you know anything about him, he's obviously pushed the crypto conversation forward massively across the board, and he led the MIT offering where every undergrad got a Bitcoin, which is quite interesting.
Not bad.
So, but didn't enter this in terms of a like a career until 2017, and really, I just sold our first startup, and I said, okay, what skill set do I have? I like regulated, somewhat controversial marketplaces where people self-select out. And in 2017, you'd still get the jokes or the kind of the digs, what is crypto, and all, this is money laundering, all of those sorts of pieces. But fundamentally, we believe that this was a really fundamental technology that could move the way that value is transferred globally. It is, of course, an asset class, and that's what we've spoken with Stephen about, is as an asset class. But fundamentally, we took the view that this is a technology that would disrupt the way that value is transferred, whether that be through stablecoins or whether that be through tokenized stocks or whatever. And our goal was to massively reduce the barriers to entry. My first business was a regulated business, and it took me 2 years to get to the start line. And I got to the start line, and within a very quick period, I was like, this doesn't work. So the ability to fail fast and innovate in a very complex technical and regulatory structure, it doesn't. You can't follow the tagline "fail fast." And so our goal was to lower the barriers to entry, either whether it be a startup, or one of the first startups that started building on us was MoonPay, or whether it be large traditional financial institutions. And that's really been our journey since 2017, is to continue to scale the type of customers that we bring on board and to abstract away complexity for our partners.
So, Edward, I know we're going to get into the capital raise that you guys recently did. Congratulations on that. And so probably you're not in the M&A environment right now, but I am very curious about your thoughts on the way rails are being built for institutions and a lot of the acquisitions that are happening here, because it's, build, partner, buy. And, we saw Bridge come into the Stripe fold. We've seen Coinbase be very active on that side of things. What do you think about how some of these more native companies like yours are interacting with more traditional financial institutions and in those partnerships and maybe even acquisitions, things like that? Yeah.
So look, we are definitely acquisitive if we can find the right sort of partner, and that's one of the reasons why we bought a lot of capital on balance sheet. I would say, look, the way that we structured our round, we raised, I think, 104 million a minority of that was from VCs. So that should give you a very clear sense as to how we think about bringing in partners to be strategic and strategically aligned with us, whether it be through, example, SoFi or Jump or Interactive Brokers or Morgan Stanley. And there is clearly a desire to catch up very, very quickly. Acquisitions don't allow you to move that quickly. And secondly, there's not that many companies out there that I think meet the qualifications of what a large financial services company wants and needs. So really our mission is to not make, sometimes when you think about innovation, people view trust and innovation as a zero-sum game. You can either be more trusted or you can be more innovative. We really try to change that paradigm and make it a non-zero-sum game and really show and demonstrate to people, hey, you can be super, super innovative. And Steve kind of spoke about the breadth of asset classes and all the other things that we do, but also being really, really solid in terms of how partners can build on us. But look, the M&A space is definitely hot. Valuations are hot. And I think it's partly because of a scarcity, but also because of a massive acceleration. We're having fun. We are, I'm happy. We've been building this business for 8 years. We've been very, very long-term view. We're happy to build this for another 8 years. But if something comes along that can help expedite our vision, both from acquiring companies or being acquired or IPOing, we're open. But right now, we're very focused on growing.
Yeah, Edward, you said that you're working with a lot of institutional partners, and Morgan Stanley is obviously one of them. Big news last month was that you guys partnered to become the infrastructure provider that will power their crypto trading in 2026. Can you describe to us what that means in practice? I mean, what are we going to see on E-Trade with Morgan Stanley? How is that going to look to the customer?
Yeah, so effectively the way that it will look day one is that you'll be able to buy Bitcoin, ETH, and Solana, as well as to deposit those funds into your Morgan Stanley E-Trade account. And so the look and feel will be exactly the way it looks today if you buy any other asset class in the world. And secondly, you will have a single cash balance, which means that if you have $100,000 in your account, you can seamlessly move between buying $100,000 of Apple or selling $100,000 of Apple and buying a Bitcoin. Again, I really think this is important to understand with banks. They have all intellectually moved on from the conversation of whether they should or shouldn't have crypto for their wealth clients. The answer is definitively yes. The question is how and how quickly. So the people that we deal with on a daily basis at these banks, their next question is, how do I leverage stablecoins? How do I think about tokenization? So it sounds weird to say, but it's almost vanilla now. Crypto is vanilla. For us, what we're really excited about with these bank institutions is how does this expedite the distribution of the stablecoin ecosystem? How can you then leverage this technology to do more around the tokenization? And what I think is really powerful that resonates with these banks is, hey, you have it now. All of your customers have an ETH wallet, right? Because if they bought ETH, they have an ETH wallet. But imagine a tokenized stock, they can go to that same wallet. And that is really, really powerful, is this distribution network of the technology. So for the banks, it is, crypto for wealth, an embedded, seamless experience, but very quickly moving on to the next few things as well.
I think also thinking about it holistically, I know we've teased at it throughout this whole episode, but essentially, as you know, because you led it, Zerohash raised a funding round of $104 million at a $1 billion valuation, which is a very, very big increase from $340 million valuation during the last round in 2022. I want to get into what this milestone means for you guys, hitting that unicorn status, the next steps, and then, as a US-based provider of crypto and stablecoin infrastructure, how do you kind of look at the current landscape in the US today as basically a valley of opportunities, would be my guess.
Yeah, no, great question. I mean, look, becoming a unicorn is validation. We move on very quickly, right? We're very early on in terms of how we view where we are in our journey. But obviously it's a validation. It's a good thing to celebrate, but it is just that. It is a stepping stone for us. I think in terms of the larger space in the US, I like to break down what happened in the US in three ways over the last 2 years. I call it regulation by enforcement. Everyone understands what that means, right? But I think there's been two equally pernicious things that occurred. Regulation by implication, which was effectively letters being sent to banks that they couldn't enter crypto effectively. And then regulation by rulemaking, very, very niche things like SARB 121, very nuanced accounting bulletins. Both of those things all three of those have been pulled back. All the court cases have been dropped. There's been a lot of clarity from the SEC, from the Fed, from the OCC to walk back some of these regulation by implications. And then obviously the rulemaking has also been pulled back with the overturn with sub 122. So the US right now is, I think, objectively the best place to be building. And we were very, very patient and took a lot of beating. And we're very, very patient to continue to build here with a select group of other great entrepreneurs building in this space and ecosystem. So I think now it is there's great clarity. But also equally, a lot of these more soft tools that governments can use have been pulled back, and that is very, very encouraging. And that's ultimately what's allowed these banks to enter, right? There hasn't been a law that's changed, right? Clarity, the Genius Act is part. That's got nothing to do with crypto. That's got everything to do with stablecoin issuance. So what's changed is these three softer things that have been pulled back without a single law being passed. Imagine what happens when a law gets passed. That's even going to accelerate even further. So we're very, very excited by what the next few years look like.
Yeah, I really, really like that framing. The regulation by implication is not something that I think I've heard before, but I think we're going to steal that. The interesting.
You just cite me.
Yeah, there you go. Yeah, I'm very curious about how slowly, or if you were having conversations with traditional financial institutions. You guys obviously raised, 2022, we were kind of slipping into, the last sort of bear market, and TradFi, I think, was very wary. Were you having private conversations with traditional financial institutions and seeing like that is the biggest barrier? Because I feel like there's so much innovation happening so quickly now. And as you mentioned, not a single law other than Genius has actually changed. Just the guidance and the environment has changed so much. So what were those conversations like for you with traditional financial institutions during that time? And like, how quickly have you seen all that change?
Yeah, so I would say that we kept an active dialogue with these financial institutions, but they were more about learning or side projects. They understood that they couldn't do anything material. But these groups have not been from us. They've not started from a standing start. They had knowledge. They had they had really invested in this space, but in a very discrete or very, very small percentage of their time. But what people don't understand about these bigger financial institutions is that when they move, they can move exceptionally quickly with incredible resources. I'm now used to having calls with hundreds of people. That is astonishing to most people, right? Like, that's like having my whole company on one phone call. So these companies can move very, very quickly. But what clearly shifted was this pullback from regulation by enforcement, regulation by implication, and regulation by rulemaking. And that is why partners have chosen to partner with Zerohash, because it allows them to go from zero, or as close to zero, right? Not quite zero, but close to zero, to 100 effectively overnight, right? They don't have to worry about a lot of different pieces. And these institutions make decision-making through risk lenses, right? The upside potential is relatively limited. It's okay, what is the threat to my existing business? And how do I make sure that by doing this, it doesn't threaten my business? That is what selling to large enterprises is. And we've been obviously very, very effective at that.
I have a quick follow-up question. I just thought, because we were talking about lots of TradFi coming into crypto activity last week, and one thing that stood out to me was, I forget which, I think it was BNY Mellon was exploring how to potentially get into tokenized deposits. I feel like tokenized deposits and stable coins are perhaps two sides of the same coin. And I was wondering, because, they're exploring tokenized deposits now, potentially banks in the US, right? And your clients are already using USDC. But when you're talking to like a bank's risk team, right? I mean, I feel like those tokenized deposits sounds a little bit more maybe scary than a stable coin. But like, how do you explain the difference to them or maybe to clients then like they're actually maybe more similar than they might think? Are you having those conversations? I mean, you said you spoke to, hundreds of people now and with these big institutions. Are those conversations that Zerohash is having?
Yeah, absolutely. I think when we talk about stable coins, firstly, what is a stable coin? What is a stable instrument, right? This definitional questions is a huge part of it. What is a stable instrument, right? Like, what is BUIDL? What is Benji? So there's often a discussion here. I think I would take I think the perception at least is that stable coin deposits they have a number of benefits, but I think they're a little bit, there's some nuances here that I think will change over time. I think one, stablecoin deposits typically have been a little bit more closed loop than open loop. But the beauty of a tokenized deposit is that you're effectively taking credit risk against the government as opposed to a private issuer. That is the biggest concern with stablecoins, is, okay, who are you taking credit risk against? And hopefully the stablecoin bill that's passed and the rulemaking will give more and more comfort around that. But that is the key that's one of the key differences. The second key difference is around interest, right? And we still haven't got a precise rulemaking on whether you can do rewards with stablecoins. Can you do interest with stablecoin deposits? How can you do this in an open loop way? But yes, I think the key questions that banks are asking themselves is, should we issue our own stablecoin or stable instrument? And secondly, how do we interface with this? And for us, I always say, look, we're going to live in a multi-asset world. There's going to be many types of stablecoins. There's going to be many types of stablecoin instruments and deposits. And it's going to be a multi-chain world, right? Each of those will be issued on multiple chains. So the massive complexity here is you've got USD equivalents. How do you make them talk with each other? And then you've got these distinct, even more layers below that, which is the chain fragmentation, which I think will only accelerate as well. When you combine those two pieces together, the biggest challenge is around orchestration. And that's what Zerohash provides, orchestration around those nuances of multi-asset and multi-chain. But I think the question right now that the banks are asking themselves is, how do we interface this as a kind of what people in payments would call payments in motion versus, or money in motion versus money at rest. Money at rest is, okay, it's just sat there. And I think that's the question that banks are asking themselves.
Mm-hmm. I like the way you call it orchestration, because in crypto, so many times when people have these infrastructure companies, they call it plumbing, which gets the point across, but not as pretty as orchestration, honestly. I think also the topic of stablecoins comes up in probably almost every episode that we do. And that's not a bad thing. You know, like they're making headlines, they're a topic of discussion inside and outside of the show. And, you know, they serve a really great purpose. I don't think it's fully met its potential yet, but they are becoming more and more of a conversation, if not a key part for, you know, fintechs, banks, payment rails. We could see a lot of this like starting to unfold, like you mentioned. So I guess, what do you kind of see stablecoins playing within mainstream finance over the next few years? Like, what would you say is like a real successful story on this front?
Yeah, so obviously we focused a lot today on what we would call like our crypto or trade business, but actually our transact or stablecoin business is actually larger. And secondly, every single one of our brokerage clients is already a user of stablecoins or will be. And so I'll talk about the two fastest growing parts of our stablecoin use cases with tangible use cases. That's the difference between us and a lot of people, is that we're using these stablecoins in use cases that we're exceptionally proud of, and we do this at real scale. So one product is what we would call account funding. Account funding effectively is the ability to go from stablecoin into fiat instantly 24/7, real time, globally. And that is now live with a number of different players whereby real-time global payments matters. The first is, for example, events-based trading. We power Kalshi stablecoin rails. We do this with brokerage firms like Tasty Trade and Interactive Brokers. And we do this with tokenization platforms like BlackRock's Biddle Fund and Franklin Templeton's Benji Fund. Those are all live integrations. Now, why do stablecoins make sense in these use cases? They make sense because a lot of activity happens when banks are closed. And two, it's a global mechanism of transfer value. Tasty, for example, in less than 2 months of launching this product, has been able to accept funds from over 50 different countries. The ability to do that with fiat, if you were to build all those different rails themselves, would take years. So that is real tangible pieces. We're seeing massive acceleration there. The second is payouts. So this is with, for example, with clients like remote.com and others that are paying people out globally. And the big change here is that we've seen massive distribution in terms of technology. If you have a new bank account in Brazil, you can accept a stable coin and you can instantly interact with the financial services in Brazil. And so stable coins offer a mechanism for payment instantly real time. Now, why are those two the fastest growing? I would say that the value proposition is exceptionally high relative to the friction that exists. Using stable coins today is still too hard to use. If I wanted to send you for example, a stable coin, I'd have to ask you multiple questions. what asset do you want? You want USDC? Do you want USDT? And on what chain do you want it on? Then I have to go out and buy the native token and send it on chain. That is a very, very difficult experience. And then I have to copy the alphanumeric address, which feels really scary. So our big vision is, as you lower, this is where I'm getting to the punchline, if you lower the friction from both a usability, from a technical perspective, and from interoperability perspective, I think the whole set of use cases that in payments actually work makes sense. And that's where I think you start to get into a lot of other use cases, cross-border, and other mechanisms, where right now the pain point is really quite high versus the value prop. The value prop is there's no better mechanism for moving value. Is it the easiest? No, not yet. And if you can become the easiest and the best, that is a huge opportunity.
Mm-hmm. I mean, I'm nodding and I'm saying like, yeah, 100%. Because like, can you imagine asking a bank, hey, do you want USDC? Do you want USDT? And which chain do you want it on? They would just be like, just send me this stable coin. What are you talking about? You know, and like for crypto native people, we understand it. Yeah, or friends or anyone that's not in this industry, right? And once it reaches that point where it's just literally sending it, like you said, that's when we could really start making motion.
Yeah, Edward, you guys may be a bit more agnostic on this than other players in this space, but I'm curious how you guys think about Collatoral, specifically post-Genius, right? So there's a debate, I think, going on right now, specifically with the markups around market structure, that Genius is, it's settled law, it's on the books, but then banks and maybe some of the other more traditional financial institutions seem to have issues with some of these workarounds that the industry is using to offer yield, when obviously you can't directly pass on yield from stablecoin issuance to customers. That's part of Genius. How do you guys think about the relationship between the issuers and clients, and where Zerohash sits into that, and like how do you think that will evolve?
Yeah, so we actually just announced that we do have an issuance business. We aren't going to issue a stablecoin ourselves, but we will partner with our clients that want to issue their own stablecoins. We have a massive distribution arm already, so it's relatively easy for our clients to enable any stablecoin that we issue. I think fundamentally, if you actually read Genius, there's a lot of stuff that needs to be figured out, right? So people think law happens, game changes. There's actually a lot of implementation that needs to be rolled out. The bill was intentionally vague in many senses, right? And punted a lot to regulatory rulemaking in order to get the bill passed. But there's a lot of work that needs to be done, including around this nuance of rewards versus non-reward aspect. We're supportive that rewards should be possible on stablecoins. I do think, though, that a lot of the issuers themselves, if they actually start to think this through, it drastically changes their economics, right? But what I think, by not allowing rewards, I think it's going to create a very unique structure whereby you'll have Genius compliant coins in the US, and then outside of the United States, you'll have non-Genius compliant coins, right, which pass through the interest. So you're getting this very artificial barrier and intersection that exists. So I think it does create very unknown incentive structures. I would say, though, that some of the issuers are maybe not publicly so supportive, but imagine if Circle's revenue decreased by 95%, like the banks would, effectively, from taking zero down to, they'll be taking a very small clip on that. So we're broadly supportive. We think it's good for choice, good for customers, and I think it's a good thing. We'll see if this rewards language that is defined in the rulemaking qualifies as the intent of the bill. And that is the big discussion right now.
Who do you see winning out on this? Do you think the banks win? Do you think the industry wins?
See, that's my point. I don't actually know if everyone in the industry is actually supportive, because everybody's got their own book. I fundamentally believe this on stablecoins. Stablecoins have to move from being an AUC, assets under custody, revenue generating business, to a TPV, a total processed volume. You have to make money on volume and transferability. And so I think this encourages that. So I actually think it's a good thing in terms of how stablecoins can actually be used.
Pick a winner, Ed. Pick a winner. Pick your fighter.
I think rewards pass. I think rewards are permissible.
I'm super curious about that point on volume, though, because this is, everybody is going to have a stable, and there will be sort of native ecosystems. The rewards language makes a lot of sense. What do you think like not everyone is going to have $1 trillion in volume on their native issued stablecoin, right? Like how do you guys think about that when you're working with folks or even through your like issuance, product? How does that work?
Yeah, look, so if you can have access to a if you can have access to a dollar account, right? This is just speaking as it is today. It is objectively better to hold a dollar. Why? It's insured. You can earn interest. And you're taking credit risk against the US government, not a private company. So, yes, of course, there's going to be part of the world that cannot have access to dollars, but I think that's radically changing, right? Like if you have a Payoneer account or you have a fixed income account, there's been a huge amount of work done on this about giving dollarization access to people that need it. You also have cash, right? So I think if you're thinking about fundamental, and also if you think about the banks aren't interested in stable coins for a part of the world where they can't service today, just to be absolutely explicitly clear. So it has to be more interesting from what I call money in motion, right? That is where it is unrivaled in terms of movement, speed, cost, access, distribution. So my view on this is stable coins have to have utility. I just articulated two of the areas that we are seeing very fast growing in terms of utility of stable coins. So when we talk about issuance, we're focused less on the rewards piece because we really think that the solvability has to be about money in motion. And I think it's very hard to argue that stable coin objectively. And I've had this discussion with people. I'm like, how is a stable coin better for me sitting in the US to hold my assets right now? What needs to happen is that I need to be able to instantly go between dollar to stablecoin. And that's what's going to happen with the banks, right? The banks become the world's biggest on-ramps. But the banks are going to want to earn, if they don't have their own stablecoin, they don't care. They'll just convert into their own dollar balance. They'll give customers the yield. They'll take their slice of the interest. And that's how it will work. So that's kind of how we really encourage people to think about use cases around money in motion, as opposed to a money at rest concept. And again, these things aren't binary. But I would just say that in terms of the skew, we would skew more towards money in motion.
Mm-hmm. How do you kind of think about all of this from more of a global scale too? Because I feel like obviously it's crypto in America. We always like to talk about the American state side of things, but crypto is inherently global, right? So when you're thinking about Zerohash's integrations and orchestration globally, how do you kind of think about improving those rails and what's possible?
Yeah, so we are a global business in the sense that our headquarters are here in the US. We are, predominant amount of our revenue comes from the US, but we have, licensing and regulatory setups across the globe, including Europe, Brazil, Argentina, Canada, Bermuda, etc. So we take a very global view on this, and we want to be the same problems that people face here in terms of innovating are the same problems that people innovating elsewhere. Obviously, the applications of this can shift. But we try to take a very global view in terms of how we think about our business.
Maybe on, I guess, the US, still sorting through like what crypto rules will look like. Obviously, we have Genius and then there's Clarity, market structure, et cetera. How do you kind of see the current regulatory environment for companies like Zerohash?
Yeah, I mean, the regulatory environment here is obviously a lot better than it was a few years ago. The critical point is that we haven't changed our behavior, right? And so I like to draw the distinction between rules and laws and kind of ethics as well, right? Like we build our business based on what we believe to be an ethical standard. That's kind of how we've taken this in terms of how we view use cases, right? The use cases of this technology are very, very broad. We're focused on fundamental disruption of global use cases versus fringe, higher risk use cases. And we're completely comfortable saying that, and that's kind of our mission, and that's our use case and application. But the macro here is, there's a sense sometimes that there's been such a shift. Trust me, the US still cares about many, many things. Money laundering, moving money to places that they don't want money to be moved to. The incentive structure, like these people are still doing things. They're just the focus has shifted. And so it's a great environment, but it's not a carte blanche, do whatever you want environment. I think that the balance is a lot healthier than it was a few years ago.
Yeah, there's a real kind of duality there on the regulatory side from one sense, and then also from the industry side of the, this is why we can't have nice things, kind of behavior that we build into some of our industry. There was recently a debate about a private letter that was sent out by some Senate Dems on DeFi, essentially wanting to turn software developers into, financial intermediaries and inspiring a lot of reviving that KYC discussion that we thought maybe kind of died with the CRA at least on the IRS DeFi broker rule. Do you think it's just inevitable in the US that if we do want to have DeFi, it's going to look a lot more like TradFi, or how do you guys think about that?
Yeah, I do think that the DeFi discussion is going to win out. I think, fundamentally, I think there's a lot of this. Do we want bad things to happen, right? I mean, it's like, but there's a difference. I think there's all these nuances that exist. Look, KYC is fundamentally broken in the US. That is, and globally. I think everyone accepts this and acknowledges this. DeFi just kind of flags this in a more meaningful way. But as a centralized platform, the ability to know your, like, I was listening to a podcast yesterday with the CEO of MasterCard. He spoke about the fact that every single authentication by 2030 is going to be biometric. So centralized platforms are shifting the way that they're doing KYC. So you can put that identity in a mechanism that can work with DeFi. So I think a lot of this is around viewing things in an anachronistic 1960s analog way versus kind of modern way of moving things. And I think DeFi obviously would benefit from a lot of the innovations around identity on chain that can exist. I think there's a difference between trying to build something in a decentralized way and trying to build something in a decentralized to bypass kind of laws and intent of laws that I think can be well-meaning. But I think fundamentally DeFi, a lot of this is around first principles, being able to write and code, and kind of freedom of speech. And these are kind of tenets very, very, held dearly in the US. And I think that ultimately that conversation will move forward in a meaningful way. Again, I think a lot of this is technical solutions.
Yeah, I'm really curious about that notion of whether or not something is being built as like a feature or a bug, right? And so you mentioned people in DeFi have been having this debate for a long time. It came up as part of even like FTX, where this notion that, everybody just getting instantly liquidated is somehow like creating a more resilient financial system, right? And it does isolate risk in different ways. But I'm curious also, just going back to the events of Friday, a lot of long interest getting liquidated.
Yeah.
Do you think we're going to need more guardrails, or like how do you think that'll play out?
Yeah, look, I mean, anytime there's innovation, there's always unknowns. And that is the fundamental challenge about legislation in this space. And it's something that we really try to reinforce to lawmakers and policymakers is it's very hard to legislate something that fundamentally in 2 years will be very, very different. The concept of what is a Bitcoin is different to what it was when I started. The code is fundamentally different. Same with Ethereum. So it's hard when there's technical evolutions. I think it's about premise-based or kind of foundational pieces as opposed to kind of being overly prescriptive in the way that you write rules and regulations. That's just my sense. The irony of much of DeFi is that it's incredibly centralized risk, right? If you look at oracles, very centralized. If you look at the writers and owners of DeFi, very centralized. So this concept that it's truly decentralized, I think there needs to be a lot of work that's done there as well.
Edward, what's the vision for Zerohash 5 years from now? Where do you hope to be?
Yeah, I mean, we want to touch in the sense of our technology touches, every single person in this world. I think it won't be necessarily well understood in terms of like, it's not people thinking, oh, I'm using decentralized technology, I'm using stablecoins, I'm using blockchains. It just will be the way that people move value. And that's going to come through abstracting complexity. So look, we want to touch 80% of the world's population in the next few years, if not 100%, through our technology rails, through our partners. And that's kind of our mission, is to, increase value, increase the way that value changes, and increase kind of overall value for society.
Awesome. And then aside from everything we discussed, what's one other thing that you're watching in DC or anywhere else that you think others should be paying attention to?
Yeah, I think the open banking stuff that going on with Plaid is super, super interesting. I think that it is actually more important than people think for the crypto and stablecoin space. If banks are going to offer stablecoins, this concept of open banking is also very, very important for stablecoins.
Can you just give our listeners a quick run through on that? I know we don't we actually haven't talked about this much on the podcast, but can you just give a quick overview a real refresher for all of us, I think?
Yeah. So effectively, there's been some rule changes that could potentially allow groups to not play along with open banking and allow banks to effectively charge for customer data that is already the customer's data, and that could limit the ability to move money, move accounts. The open banking, it creates a lot of net benefits. And should you be able to stop that? And so there's a big discussion right now, and there's been a lot of coverage between Plaid and JPM reaching an agreement. But I think it's fundamentally very, very important to allow people to, one, control and have sovereignty over their identity, and two, to be able to create value that it accrues to the user ultimately, which is I can move money and value way more easily through open banking, as opposed to it accruing to financial institutions. So I think those are really, really important fundamental philosophical points.
And there's a lot to do with the CFPB here, I believe, and the OMB, and there's that fight at the top.
Word soup, but yes,
right.
a lot to go there.
Awesome. Well, thank you so much, Edward, for coming on today. It was a pleasure, and we look forward to having you back on.
Thanks, Edward.
Great, guys. Appreciate it.
Thank you.